Started. Good morning, everyone. This is Brandon Mavlios, Senior Director of Product Marketing here at Datasite, and thank you for attending our session entitled Career Insights from the Top Minds in Deal Making. First off, we'd just like to say that we hope everyone is doing well and staying safe out there. We're certainly in a very unprecedented time and truly in a year unlike any in recent history. But with that said, the catalyst for our discussion today is that the pandemic has really forced us to work differently with our colleagues and our clients. And whether you're in the early, mid, or late stages of your career, everyone has had to adjust in one way or another. So to learn more, we have an experienced panel of industry vets here to talk to us today about what they are seeing in the market from both a financial and transactional standpoint, as well as how the current environment is reshaping our careers. So first, our legal disclaimer that none of the opinions belong to Datasite or the firms of the panelists. And then just a bit of housekeeping. Right now, you are viewing us through the On24 platform, and we really see you as the audience as our fifth and most important panelist. So through the console, you'll see that there is a button for Q&A. So we will be addressing Q&A at the end of the discussion. So please submit your questions for the panel throughout the webinar. There's also a survey, there's additional reading materials, and we will be doing polling throughout the webinar. So as you see the polling come up, please click on your answers and click submit. We'll have some opportunity to address those answers. And then finally is our Deal Maker Circle. So there's a button at the bottom of your console to register for the Deal Maker Circle. And it's really a Datasite network to ask questions, make connections. So if that's something that interests you, please feel free to register. So with that said, I'm really excited to introduce our speakers for the day. We have a well-distributed group on the sell side, buy side, distressed, and even the legal element. So thank you again for joining, and should give us a very well-rounded picture of what's going on in the environment today. So first off, Ben Hochberg, who is partner at Elite Equity Partners, and Ben has just a myriad of experience on the buy side, having previously worked at Odyssey Investment Partners as well as Bain Capital. And then we have Greg Rodgers representing us from the legal side. So Greg Rodgers is partner at Latham and Watkins and a member of the firm's corporate department and the capital markets, derivatives, and public company representation practices. We then have Joshua Rosenbaum on the banking side, managing director and head of industrials and diversified services at RBC. And Josh is also the co-author of the Wiley Finance book entitled Investment Banking, Valuation, LBOs, M&A, and IPOs, as well as several other publications. And then last but not least, Truong, Senior Managing Director at Centerbridge Partners, and Bao focuses on investments across a range of sectors. And before Centerbridge, he also worked at Fortress and Lehman Brothers. So thank you again, panel, for joining us today, and we're very excited for the discussion. Okay, so let's get to it. On today's agenda today, first we'll talk a little bit about what is happening in the markets and what's potentially coming up, and giving the panel an opportunity to share their point of view. And then we'll break into the career segment, where we'll first start with working from home and tips for working in this new normal that we are in now. And then we'll segue into hiring and recruiting, which is obviously top of mind for a lot of those, especially the junior audience that might be on the line today. And then when we get through the content, we'll, as I said before, break for Q&A. And again, feel free to input your questions throughout the webinar. Okay. So just to level set a bit and likely to oversimplify a bit the year 2020 to date, it's really been a year, two or three, or even many more stories, right? January, February, we knew we were coming off a high of 2019, record highs in the stock markets, low unemployment, great M&A figures, positive economic indicators. And then we hit the pandemic in March and the story flipped. So unprecedented government and intervention and stimulus, which we'll likely see more of. Bankruptcies hit record highs, up 26% on the year. Capital markets activity was blazing, with institutions needing capital and investors willing to provide to a degree. And then M&A activity fell to 16-year lows in the second quarter. We've started to see that pick up, but as you can see, it's been a bit of a jigsaw puzzle. And as we kind of enter the next phase of this story, we're sure to learn more. So given that recap, we wanted to jump to the first question for the panel. What has been the impact of recent events on your deal flow? And what are some predictions for the remainder of 2020? And Josh, we'll start with you. I know it's certainly been an interesting time to be working in the industrial sector. What have you seen in your space?
Thank you. So I guess I'll give a little context. And, the four of us on this panel are roughly around the same age. So our careers have, we've had similar perspectives and experiences in terms of periods of great disruption. For the three of us, there was 0102. Obviously started with the tech bubble, but then kind of 9/11 crystallized it. And then you had a couple of tough quarters and then, ran into this incredible bull market. 0809 arguably is probably more formative for all of us, which was, downright scary. I think most of all the people that are listening in probably didn't have to live through that professionally. And that's a good thing. Those were not fun times. And, when this first happened, I guess late February heading into March, the great unknown, this great disruption, immediately, and you could see it in the big stock price correction, you could see it a little bit on the debt side, but I know you all want to hear, from Bao on that front, on the distress front. You saw the market react as it does always in these great periods of disruption and uncertainty and go down dramatically. 0809, that lasted for a prolonged period. I've got some great charts, and I'm sure many of you have seen great charts. If you look at the stock market and the debt market for kind of that March-April period of 2020 versus 08 and 09, you see this incredible spring back for asset prices. That didn't happen in 08, 09. At the end of 08 and into early 09, the asset prices remained depressed for quite some time. So that to me, that is the story, the narrative from kind of a market's perspective this time around. And, we could have a several-hour discussion on well, I know there's a poll question coming up on what's driving it, whether it's sustainable, various risks, various perspectives on it. But from my perspective in the banking deal-making world is we've had these incredibly vibrant capital markets. I mean, back in 08, 09, it was basically investment grade. Even that wasn't attractive. And now you've got issuers that are accessing the bond market at the low end of the spectrum. And that's meant that a ton of companies have been able to use regular way capital markets to get liquidity and save themselves, frankly. Now, there's been a ton of bankruptcies. And again, these questions are more Bao's purview. But a lot of companies that back then wouldn't have been able to survive and be given a lifeline. And it's not just like a 1 quarter or 2 quarter lifeline. When you're refinancing debt, 5, 7, 8, or 10 years out, you have money, you have a lot of leeway to go out and run your business. So I've done a ton of capital market. I'm not just investment grade debt, not just high yield, actually IPOs. It's incredible equity market, also a big topic for discussion. So in that sense, it's been a lot busier. There's been a lot more to do on the capital market side. The last thing I'll say before I pass the mic to co-panelists is M&A, however, has been difficult. And I think you'll hear from Ben and Greg and others. Ben obviously is on the buy side doing M&A for a living. In this kind of environment, even though you do have financing, which is critical lifeblood to do deals, getting buyers and sellers to agree on price, with uncertainty on target performance and frankly buyers wanting to preserve some, dry powder, that's a little more difficult. But I will say this, you're seeing merger Mondays resume, a lot of stock deals for reasons like I just said. And I'm also seeing a lot more M&A conversation. People get a little more visibility, obviously dependent on the sectors and subsectors. I will stop there and pass the microphone.
Yeah, thank you, Josh. Appreciate the perspective. And Ben, I know we alluded to the buy side already. What are your thoughts?
Sure. Thanks for the question. Our perspective is we have capital to deploy over a 5-year period of time, and our investors and we expect to be able to take advantage of opportunities through the cycle. Josh highlighted probably the most important issue right now for our business. We're long-term investors, and we need to, generally speaking, enter into an M&A transaction with a willing seller. Nobody is bringing a business to market right now that is a willing seller. People are only coming to market today if there's an exogenous capital need or some type of distress. So until we see the resumption of kind of more normalized willing sellers coming to the market, it's hard for us, who tend to try to be management's partner, to craft the kinds of transactions that we're going to do. So what do we do about that? We can't sit on our hands and wait, because that will mean we miss the market window. So we're using existing portfolio companies' balance sheets to act as a strategic acquirer. We've done 3 or 4 transactions already this year since the beginning of COVID to either use existing companies that have interest in certain sectors to do consolidations, or mergers of like-sized businesses that we can provide some equity capital to help catalyze value creation for all participants without having to establish the most difficult thing right now, which is a fair control transaction price. So the world continues to spin, and we've found ways to deploy capital. We have to imagine we're going to be in these things for 4 or 5 years, and we've made it our business, after addressing health and safety questions around our firm and our portfolio company teams, to find ways to keep deploying capital.
Thanks, Ben. And Val, we mentioned distress. I know you've done quite a bit of distress work in your time. What have you seen in your area, whether it's in distress or in other areas?
Yeah. Well, I guess you could say that there has been a fair amount of activity amongst the distressed sector and funds. And you've seen a number of funds, large firms, in March, April, launch fundraising in the context of everything that's going on. There was a period, we've had a long period of economic growth since the financial crisis, 10+ years. And economic cycles are indeed cycles. There are ups and then there are downs. And government stimulus for coming out of the financial crisis has helped stabilize the economy for a long time, quantitative easing. So the bull market lasted for a while. And this year there was a lot of volatility. COVID, I think, interrupted a lot of that. And March, April, there was a lot of volatility in both the liquid markets, principally the liquid markets. A lot of opportunity for funds like ourselves to take advantage of that and look at situations and invest capital. Government stimulus had come in again and helped stabilize the capital markets, which was a good thing. There was a lot of uncertainty, certainly in the 3rd week of March, in terms of where risk could price and where capital just froze for a little while. And in those circumstances, as we've learned both through the financial crisis and frankly through March, that the way to unfreeze the markets requires large balance sheets, government-sized balance sheets, to come in and help restart the markets. As it pertains to opportunities going forward, our business, the business at Centerbridge, we have both a private equity business and a credit business. Our thinking around that is that we can invest through the economic cycle in both downturns and periods of what we call sunny weather. I would expect over the next kind of 6 to 9 months, a difficult environment, a difficult economic environment. I think the past couple of months have been supported, as I said, by government stimulus, both in the capital markets itself, but also individuals, right? The government has supported individuals who have been, unfortunately, let go from their jobs. So, unemployment benefits were increased. Some of that may roll off soon, but that's supported the economy, at least over the past couple of weeks. The capital markets have been available to large companies. They've been able to raise debt principally to support their liquidity needs, because many of these companies that were in the call it ground zero of COVID didn't have revenue for many months, and still don't. Some of them still don't. And so that capital markets was available to help plug that hole, that liquidity hole. I suspect that over the next 6 to 9 months, we'll see some of that. So companies kind of come to a realization about where they are from a leverage perspective, and where their business outlook could look like over the next 6 to 9 months if COVID certainly persists. So there will continue to be volatility, and that's kind of what we're planning for.
Thanks, Bound. We've talked about capital markets a few times already, but I want to turn the question to Greg, because Greg, I know you have quite a bit of experience in equity capital markets, having worked in some big direct listings and IPOs in your time. Slack, Spotify, Shake Shack, et cetera. What's your perspective on capital markets for the rest of the year? We've heard, SPACs are a big buzzword, obviously, right now. Do you think it's going to be, SPACs? Is it going to be more traditional IPOs? I guess, what are your thoughts kind of looking back and looking forward?
Yeah, so the interesting thing from our perspective is just how many of the markets are open right now. It started off, as folks said, with the investment grade market, which makes sense. The federal funds were acting as sort of a backstop to that, and the investment grade market was generally superior for that segment that needed large capital. We then sort of saw the convertible debt market take off, which makes a lot of sense. There's a lot of value in that when equity is depressed, and that market is typically dominated by life sciences or tech, high vol issuers. But in this market, we've seen airlines, retailers, tech, life sciences, et cetera, all hit it. It's been tremendous. But recently, we've seen IPOs pick back up, largely life sciences and tech. But for the right company, that market is opening up. And then, high yield, as Josh alluded to, is back to, which is encouraging for sort of our bread and butter, LBO work. So the great thing is this is not an 08, 09. And then I agree with all my panelists. I think one thing about this is, we tend to be busy when our clients are under stress, and we have a lot of clients under stress like right now, and they're going to be so for the foreseeable future. Unfortunately, some of them will go to my restructuring partners, but a lot of them have a lot of fight left, and they'll be there for the cap markets folks will be there. And then, I totally agree with Ben's comment that we're seeing M&A pick up, particularly in the strategic space. And then the other thing we're seeing for folks like that are pipes. If you can't buy the whole company, you can make a nice anchor investment, at attractive pricing.
I think you're on mute.
Yeah, Brandon, we lost you.
Yeah, Brandon, I think you're on mute.
Oh, sorry. Can you hear me now?
Yes.
Yep. Yes.
Sorry about that. So to the audience, please just select the answer that makes the most sense to you in this polling question. Which factor do you think had the most significant positive economic impact over the past several months? The reliability of stay-at-home tech, Fed Congress action and stimulus package, capital available in the market, or the various loan forgiveness programs? And we purposely did not put a answer 5 here because we wanted to see if the audience had a perspective in terms of which is maybe the most valuable or had the greatest impact. But let's see what everyone had to say. So it makes a lot of sense. 69% said Fed Congress action stimulus package. Based on the panel commentary, I think we heard that come out quite a bit, with about 25% saying the reliability of stay-at-home tech, which makes a lot of sense, because I think without being able to get online and do things like we're doing today on webinars, it would be very difficult to operate. Okay, so to get into the career segment of today's discussion, let's start off by talking about how everyone has reacted and viewed this new working at home or working remotely environment. So back in actually April, Datasite ran a poll of about 100 deal makers to understand their concerns and apprehensions. And we saw some interesting results. So 82%, again, this is April 7th, so right when the pandemic was starting, were not worried about their job, and 80% did not miss the water cooler chats with coworkers. So, really there wasn't that short-term concern of, hey, this is going to go on a while, I might, lose my career or my job. And then not to say the survey participants were antisocial at all. They just didn't think that being away from work for a short period of time would have any sort of impact on those water cooler chats or those social interactions. Likewise, though, we saw some apprehension where 50% were uncertain how remote work would impact their client-advisor relationships, and 50% were also concerned over loss of productivity and collaboration. So while maybe in the short term they weren't so worried or anxious about things, there was this almost mid to long-term concern that how am I going to work with my clients? How am I going to collaborate with my colleagues? Will I be able to do it remotely and in this tech-friendly way? Let's re-engage the audience and see what the folks today have to think. So again, another polling question to the audience. What have you found to be the greatest concern with work from home? Access to mentorship, collaboration with colleagues, learning new skills, or staying productive? And really curious to see what everyone has to say today. Personally, I think it's toughest to learn new skills when you're not able to just look and see what other people are doing and ask questions. Yeah, we'll hear what the rest of the audience today has to think. Interesting. So pretty good split down the board. Access to mentorship, collaborating with colleagues, staying productive. Surprisingly, I think the least number of people actually agreed with me. But this is great. Thank you, everyone, for engaging. And I think this is a great segue into our next panel discussion. So question for the panel, how have you adjusted to working from home? And specifically for a lot of those on the call who may be a junior level audience, how can they stand out? And so Bao, we'll start this question with you. What do you think?
It does have its challenges, as everyone I think on this online knows. We have been spending a lot of time on MS Teams and on Zoom, and we have asked the entire firm to be on video, right? So there's, and that's not natural for a lot of people, and some people may gravitate towards using either the phone itself or kind of just an audio interaction. But we have emphasized video as a way to connect with people and to have that personal connection. And I guess my advice to folks, if and I'm sure everyone's been working from home for some time now, and they figured out kind of what works and what doesn't work for them. But making sure you maintain that personal connection, certainly through video, but also as you think about, there's a comment on kind of mentoring and working with colleagues, making sure you reach out to folks and before you. It's easy in this work from home environment when you connect with people and their scheduled calls to be very transaction oriented. Let's get the work done and then let's proceed to the next thing. But connecting with people, talking about their personal lives, just spending a few minutes, again, trying to recreate and making that personal connection, which is very difficult to do when you're not physically interacting with people, I think is an important process of working from home, something that we've learned for sure.
Yeah, thanks, Bao, for the insight. And Greg, I know a lot of the, say, bankers and lawyers that are in your firm work together and collaborate on various projects. How has that collaboration gone? And I think generally, any advice for those, again, to stand out?
Yeah, so first, I wholeheartedly second Bao's comment that, video when you can. I mean, you can't always. Sometimes you have to use phone and sometimes you have to resort to email. But, at least, once a day, I try to get on the video with a member of my team just to make, people are starved to see, human faces, frankly. I mean, one of the
Sorry, I think we may have lost Greg there. Can you still hear us?
I can hear you. I can't hear Greg.
Okay, we'll give Greg a minute to reconnect here, and we could move on to the next question. So very much related. What do you think the future of working from home looks like? And I know, a lot of us work in a very traditional environment where FaceTime is often important. But what do we think in terms of how we gotten accustomed to it? Do we feel that it's something that is going to stay? And Josh, starting with maybe banking and the culture of banking, what do you think?
In terms of work from home?
Do you think do you think working from home is the future? Do you think a lot of people will continue to work from home even as we come out of the pandemic?
I mean, and this is a good one. I'll try to go quickly because, it's different for banking. It's different for private equity. It's different for distress, different for, corporate law. As for the bankers on the line or those that know banking, as you become a more senior banker, you're on the road. I've been working from home. I've been working, I don't know, replace H with hotel or, with A for airport. I've been doing that for the better part of 10 years. So I'm really used to it. Not to this extent. I think it's more like I haven't been doing it from home. So that has other considerations in terms of just your setup and, guidelines and making sure that your 8-year-old doesn't run in the room and things like that. All of that, though manageable. Listen, we're thinking about it. I think I'm very hesitant to make, long-term predictions on this. I think when things were going down from January and February, we made sure everyone was ready to work from home. It's pretty easy to do technology-wise, but I think we'd all agree there are things just internally in terms of team building, collaboration, and just other tangible and intangible things you can't replicate doing this. And the other thing is on, for me, meeting with CEOs, CFOs, meeting with lead shareholders, it's just not the same doing it over Zoom and doing it over the phone. And I think again, I'm going to pass the phone to my colleagues. I think what you're going to hear from Ben when you're buying companies is you probably want to meet the team and Val if you're doing large investments, and Greg for whatever large deals you're working on. So I'll let them take over.
Sure. So Ben, what are your thoughts here? And then we'll shift to Greg and Val.
Sure. I don't think of myself as that old, but I did start my career when there were desktop PCs, no internet, and fax machines. And so I would say the first thing you have to do is embrace the changes in technology and figure out how to be productive. It cannot be an excuse. It has to be a tool that you've mastered. And if you're just starting your career, you should make sure that you can make yourself as functional as possible. Val made a great point earlier. If you're working for a large organization or want to, you need to be your own best judge of whether you're able to form internal relationships. And if you find that you're not able to do that, reach out to the folks that you work with. It's much harder to address the question Josh put out to the group to make those relationships outside of your organization. You have to meet somebody new. You have to build a trusted relationship. You have to work with people in a boardroom context or in a deal-making context. So that will continue to pressure folks sort of my tenure, where we have to go out and find a new relationship and get to a level of conviction where we'll put several $100 million of capital behind an idea. That has been hard remotely. We've challenged our teams where they've been interested in making new investments to find a way to go see people in person, even if it means you fly somewhere, find a picnic table, and sit at opposite ends. Figure it out, because we're going to be in an investment for 5 years. We're going to put a lot of our money and our investors' money behind that idea. Let's figure it out. And we haven't had to make that decision yet. We've had our portfolio companies able to travel and make those kinds of in-person connections with folks. But I think for a brand new platform investment, that is a hurdle we're going to have to jump over down the road.
Gotcha. Thanks, Ben. And Val, anything to add here?
The question is about the future of work from home, and I agree with all the sentiments that have been expressed. Personal relationships, interacting physically with people, and getting to know them is very important. One of the things that I hope that that we learn from this work from home experience, and that we do carry on into the future, looking forward, is that there's been a lot of focus for many people on work-life balance, and there are benefits of work from home. People that have had long commutes into the office, people that have had hour-long commutes both ways, right? Working from home, you suddenly have 2 hours left. You've gotten 2 hours back of your life, and spending time with families. And so my hope is that we take this experience and we have there's a healthy blend, right? There's certainly personal and physical interactions with people are extraordinarily important. But hopefully we can all find a way to blend both the work from home and in office and travel and everything together to improve that work-life balance that I think everyone is hoping for.
Excellent. Thank you, Bob. Okay, so let's move on to our next segments before we hit Q&A, just to talk a bit about hiring and recruiting. I know this is obviously an interesting year and everyone has this top of mind. Haven't seen too many headlines on layoffs or anything to that extent, but with all the uncertainty, wondering if it can continue, right? We saw bank earnings last week, which looked pretty positive from a bulge bracket perspective. If that's any reflection, I don't know. So maybe just turning it over to the legal side for a second. Greg, if you are still there, what's your word on the street in terms of, is the industry going to contract at all? And how about at a junior level?
Yeah, so at Latham, we're fortunate that, we have a very large, diversified, global business that's, in a growth mode. And as, one advantage of being a lawyer is we provide services in up and down times. So I don't think the legal industry will actually contract, at least at sort of our level. I do think that periods like this, and I think we saw it in an 08, 09, do tend to produce, winners and losers. And I think, stronger firms that are viewed as, safe hands and that are well capitalized, to weather this, are going to come out stronger on the other end. We're going to pick up, human assets that are going to make us better. So I worry a little more for the medium and lower tier operators, but even for them, this will present opportunities. The work at home thing is interesting from the legal side. It works incredibly well for us actually. 2019 was a record year for us, and we're up like 30% over that right now. To give you an idea. And it's just because of the nature we do, it's very easy to do it, sitting in your seat. Our problem is the one, Bao alluded to, which is you got to know when to stop or you just work from home becomes live at work. But our number two cost is real estate. So if we figure out a way to hotel more or whatnot, there could be opportunities for, tech driven, legal firms. And that's, something, we're looking hard at.
Gotcha. Thanks, Greg. And Josh, any perspective on your side?
I wish I could say that investment banking were up 30% year over year. Maybe some sales and trading, but granted where we thought we'd be in March and April, it has been a very pleasant surprise. I'll leave it at that. And we talked about capital, a little less so on M&A, but this is all I'm sure everyone on the phone knows. This is just daily headlines. I'd say first, we're not making any big decisions. This is all new terrain. We're taking it incrementally. That extends to, going back in the offices, what we're going to do in the future in terms of work from home versus the office. We know offices will have a big role to play. I personally think that for everyone here listening in, you're all thinking about your careers, whether you're happy where you are. Whether you want to go buy side, sell side, somewhere else next. I mean, I think the prevailing narrative, and you've heard this is more at the beginning of this discussion, in terms of how well the markets have done these past few months. So we talked about government stimulus, we talked about the Fed. I think this is going to continue to be the prevailing narrative. It frankly has been for the last 10 years and the next 10 years and beyond. The game right now is to chase returns. This is for individual investors and this is for companies. And, when you're chasing returns, you're going to be doing deals and there's a ton of capital out there. So I think for all of you, as you think about kind of, your career and where to go, I think it's pretty much win-win-win. There's near term, certainly in medium term uncertainty, and there's going to be changes. But if the capital markets are doing this in this environment, you can just imagine where they're going to be once there's some stabilization. I know, Brandon, that took us probably to like the next place, but I know, most, if not everyone on the line is thinking about their careers and what it means for them. But specifically, we made an announcement, RBC did, extremely early on that we're not doing a headcount reduction due to COVID from the CEO of the bank. and we've held to that. We have zero plans on that front, and frankly, we're busy. There's plenty of deal activity.
Thanks, Josh. So to move forward, and this question specifically pertains to recruiting, right? And exit ops for those that are maybe in IB now or are thinking about potentially the next step. So how do we think post-IB careers might be different this year, and any advice for success? And Bao, maybe we'll start with you. Any thoughts?
I think in the work from home environment where people are interviewing over Zoom, I think that is more of a challenge. That's certainly going to pose a challenge, and it's going to require a fair amount of creativity. And it certainly makes networking more difficult, right? And so when you think about changing careers or kind of meeting with folks and introducing yourself to people, I think we're all going to, and everyone is going to have to be more creative and more assertive in terms of, and I would say kind of widen the universe of opportunities that folks are considering. And you know, and be more aggressive in pursuing those opportunities. But you know, I don't know if I have much more to add to that.
Okay, great, thank you. And Ben, what do you think?
So we've hired and onboarded 5 people since the start of COVID. The need for smart, motivated, talented professionals entering our firm post-IB remains a key focus for us. I agree with Bao. It's hard to really feel like you got to know somebody in a 1-hour Zoom, but we need to adapt to the technology because the need for people at that level remains strong in the way our firm is organized. I think if I pivot to advice for success, think about the way you present on camera. Practice the way that you can get your points across. If you feel like you're a better person in person, then develop the same skill set through Zoom, because we're not going to have a choice for a while. It's an unfortunate reality of living in this COVID age that we're going to have to get good at that. In terms of what has stood out for me, we're going to look a lot more to references, because if we're not able to develop a personal relationship with somebody over a 1-hour Zoom, we're going to make it our business to talk to people who have had that opportunity in your past experiences. So if you're working in IB today or in another advisory capacity today and you want to pivot to a new career, think carefully about the people who knew you when we were all face-to-face and what they would say about you, because we're going to make it our business to find those people and talk to them before extending an offer to you. And that will help us form a composite view that we'll make a hiring decision based on.
Excellent. Thanks, Ben. It's very helpful advice. And with that said, we're going to move on to our last polling question before we hit Q&A. So, final polling question to the audience. Please submit your answer. How has networking changed for you since the pandemic? Do you think it's easier because everyone's now at their desk and you could reach them? Do you think it's harder because you can't actually meet in person? Or do you think it hasn't really made a difference? So we'll give everyone another few seconds to respond. Let's see what we came back with. So an overwhelmingly large number of people thought it is harder because you can't meet in person. That makes sense to me. Greg, do you have any feedback or maybe even any advice of how to network in this virtual environment? We heard a bit of it from Ben and Bao, but any thoughts?
Yeah, I mean, I think networking has absolutely been a challenge during the pandemic. At least if you define that as expanding your network, our collective industry relies heavily on, in-person meetings, conferences, and frankly, just, shared meals at good restaurants, often, lubricated with a good bottle of wine. And, my partner introduces me to his contact or her contact, and that's how, relationships grow. Those sorts of events are obviously heavily impaired right now. But I do think that there's an opportunity in the pandemic to reinforce your existing network. And I think the key there is to think carefully about how you can help your contacts In my case, it might be, helping a client, a good contact make sense of the CARES Act, or giving them the benefit of a new market trend in, pipe technology. Maybe you can even help a contact, find a job, with Ben. Help in times like these, will always be remembered. I remember one of the smartest things, Latham ever did as a firm is when, Lehman imploded, that was one of our best clients. We offered, basically all the bankers we knew, free real estate space in our conferences. So they used our phones, computers, and Wi-Fi to help them land their next spot. And that, forged relationships that, we are making hay out of to this day. So, look for opportunities.
Great. Thank you, Greg. Okay. So with that said, thank you for all the great questions you've submitted through the Q&A module. We will start with our first question. All right. What are the 3 most important traits a candidate can have while pursuing a career in IB or PE? And Josh, not to put you on the spot, but maybe we'll start with you. What are the 3 most important traits?
I'd say one is a history of accomplishment, whether that's, grades or leadership activity, sports instrument, president of some group of the class. I'd say second is a demonstrated interest /knowledge of finance. And then the third thing is, kind of just interpersonal skills, which, a 30-minute interview or especially a 30-minute interview for 5 or 6 people are meant to assess. So those 3 things. I mean, it's changed a little bit now that expectations are higher in terms of, back in the day, I think they were just looking for strong athletes that you can run with, but it's really, there's so many strong athletes that differentiator increasingly is kind of interested in knowledge of finance. Frankly, it's one of the reasons why, I wrote the book and why, we've updated it. It's, it's just a differentiator for that portion of the interview. And they start asking you, some technical questions to be able to show that you're taking the time to go learn it on your own. So those are the 3 for me, but I'm curious to hear from my buy-side co-panelists what they look for.
So I would throw a couple more on the list. I would add technical skills and proven achievement of technical skills. One concept that we spend a lot of time talking about is individual accountability. Has the person demonstrated individual accountability, and how? And then the third thing that often differentiates a candidate, many of whom have these technical skills achievements and show accountability, is curiosity. Are they completing tasks that are put in front of them, or are they asking questions, pushing the thinking, adding to the conversation versus just turning work around? And we really see people differentiate on that dimension. It's intangible, but it comes across clearly in references. We often have folks looking for career steps with us do case studies, and you can really see 2 different types of work. One, going through the motions, doing a great formulaic job, packaging something up. And then a second category of people who asked, did all that and then asked a bunch of smart questions on top and pushed further. So that's a differentiator.
Thank you. So let's maybe go to the next question here. And Greg, we'll start with you. Looking back on your early career, was there one defining moment that stands out?
So I think for me, probably the moment that probably, made my step at Latham was the first convertible bond deal I ever did, and to the point about having hard skills. I have, even though I'm a lawyer and have a liberal arts background, I'm for a lawyer not afraid of math, and it was at the time when convertible note arbitrage was just taking off, and I happened to get an assignment to do sort of the largest convertible bond deal ever at the time, along with the first equity derivative that we now do all the time with a call spread. And frankly, and this is, I guess, a good point for all the juniors out there, my partner in charge of me was frankly terrified of it. And I sort of took ownership of it and frankly made him look good in front of his client, which was the GC of our mutual client. And that's advice for the young people out there. You can never do wrong by making the people, your superiors look good in front of their superiors. I'd go with that one.
Excellent. And Belle, same question to you. Was there a defining moment early in your career?
Yeah, I don't know if there was, kind of one defining moment. But what I would say when, and there, a couple of experiences like this, when you're young and you're learning investing, and this when I was younger and I was learning investing, and all the elements that were described, traits that were described earlier in terms of making you stand out and performing better than your peers or better than everyone else. When you're investing in liquid markets, you are essentially competing with Mr. Market. And behind Mr. Market are hundreds, if not thousands, of investors, right? So every time you buy a security, someone's selling it, right? And so that seller probably has more knowledge of that security and that situation than you do because they've been involved for a little while. They've owned it, but they've made the decision to sell, right? So you're always taking a different position than someone else in the market. And when you're an investor, there are periods and situations early on, and these situations were important to me as my development as an investor. There are situations where I figured something out that the entire market did not, and which is a phenomenal feeling to have when you know that you figured it out and no one else on the street has. And when you say the street, it's like everyone on the street, right? And so thousands of people looking at this situation and you have figured it out. And those moments, I think, as an investor, you reflect on those moments, you think, man, I can really do this. And so those were important moments as part of my development as an investor.
Thanks, Val. Next question for Josh. What are some of the best ways to reach out to banking professionals? LinkedIn seems to be the best way I can even find bankers, and I'm wondering if it's acceptable to contact via message.
Yeah, I would. Yeah, you gave me the answer. I appreciate that. I'd like the experience of the answers. That is, I think, the most reliable in this. The old days of sending something, to the office. You could send something to the office, and when the banker or the investor gets to the office in a month, 2 months, 6 months, then they'll find it. I think it's definitely LinkedIn. I think pretty much everyone's on it, and it's very effective, and I think it's become acceptable. But I wonder if others on the panel share that same view. For me, it's acceptable.
Yeah, and Greg, let's flip to the legal side. What do you think?
Well, maybe I'll take a slightly contra view there. I rely heavily on LinkedIn to track my investment banking clients because they move around more often than we do. But I find the best way is by mutual introduction. If I'm trying to contact, somebody at, a private equity shop that I think would be interested in, a new technology we have to offer, say an innovation in direct listings or something like that, I'll typically try to triangulate on somebody who knows them and go through there. The great thing about having done this as long as I have is that it typically doesn't take all that long. And LinkedIn is very useful for that, I would say.
Excellent.
I would agree. Warm call is preferable to cold calls, for sure. For sure.
Thanks, Josh. And Ben, from the buy side, what is your perspective? Do you think LinkedIn is an acceptable means or something else?
It's acceptable, but it's like one step above unacceptable. If you can do better, you should do better. Do the research, find a reason, pick up the phone, send a personal email, find someone to introduce you. LinkedIn requires almost no initiative. If you pay the $5 a month, you in theory can email a lot of people, but that to me is a very low bar. The people I spend more time and pay attention to have found another way, have gone through Greg to say, hey, Greg, you know this guy, can you introduce me? Or you might have worked with somebody in the past, or you just put a thoughtful email together and reach out. You know, you can tell when someone's copying and pasting and they don't update all the references. I mean, you can tell when somebody really put some thought into it. So I look for, you know, folks that have taken, maybe it's only 30 extra seconds to come up with a way to really show that they've done a little bit more legwork. But LinkedIn's fine. I mean, I don't want to be a snob about it. If that's the way that you find me and we start a conversation, it's turned into some unbelievable relationships that I've created that came over LinkedIn. It's fine. But, you know, I'm sort of with Greg. You can do more. You should do more.
Thanks, Ben. And so, Bao, this next question we have, we'll start with you. Question from the audience. I struggle with networking since I'm relatively introverted. Any advice on how to get more comfortable?
You know, so I'm introverted also, as are, I would say, my past couple of bosses are also introverted, and they are widely successful, and both financially and career-wise. And I think for an introverted person, it is unnatural to go into a room, at least for me anyway, to go into a room and kind of start talking to people, right? It's a little intimidating to have all these people and faces. I think it does, and it's like anything that you're uncomfortable with, like speaking in front of a large crowd. Many people are kind of uncomfortable with that, but there is a way to kind of just rehearse it, and there's a way to, and one has to, I think, approach it on their own terms, right? Think about kind of, and just do it the way that, think about what is most natural to you individually, and you know, maybe, for example, pulling people aside when you go into a large room and having a more one-on-one conversation. I don't know if there's a prescription for it, but I guess what I would say is find something that's natural to you, and you know, and relax about it. I would, as an analog, one of the I had a coach, a speech coach, say to me once, you know, when you're speaking in a large group, relax your body. Think of yourself as if you're in your living room and you're hanging out with a friend and you're telling your friend the speech, right? And so relax, feel as if you're among friends, and things will feel more natural.
Interesting. Thanks, Bao. And Greg, same question to you. Any thoughts? I think Greg might be stuck. Hey, Greg, you still there?
Yeah, I'm here. I dropped for a second.
No worries. Yep, same question to you. What sort of advice do you have in terms of those that might be introverted and how they might be able to refine their networking skills?
Yeah. Am I back? So I would say like many lawyers are introverted, and I'm very happy that Bao admitted to using a speech coach. I've done that myself. I would say 20 years ago, the prospect of speaking on a webcast like this would be terrifying to me. So I guess my point there is it's an acquired skill like anything else. You can get used to it. But I would say that the pandemic is sort of presenting an opportunity for introverts. You know, if you're stronger using the written word, you know, do some thought leadership in your area. You know, volunteer to write an article or other thought leadership piece. Work on work to perfect a pitch deck that your institution can use. There's a lot of the people who are really good at cruising cocktail parties are impaired right now. So now is your chance. Introverts of the world, unite.
Thanks, Greg. Okay, I think we have time for one last question, and we will start with you, Josh. How do you see the pandemic affecting the value of business school, and how do you see it, if at all, affecting the value of a CFA?
I think much like these we're now entering terrain which is broader social, personal, philosophical. technical areas. I'll try to keep it tight. Much in the spirit of from some of the things I don't think any of our panelists here have college-age kids, but some panelists are ahead of me in that respect of thinking about it. But just like if you're a graduating senior right now and you may have an opportunity for a gap year, seems like a pretty good time for a gap year. If you want to think about business school as an area, I mean, it does present its own challenges. I like the idea of, taking a year or two during this time to go, pursue, especially if you're a career change, or pursue a new area, a time for study and reflection, while you're waiting this out. The flip side, I'm sure you're already thinking, is that, okay, one of the main purposes of going to business school is networking, and if you're doing it virtually, that could be a problem. Those are the pros and cons to weigh out there. I can't say that I see this really impairing the value of a business school degree. I frankly think, and I think at least 3 of us have business degrees, I think part of the value of business school degree is people that are trying to either change a career, or people that just want broader, exposure to different businesses, which is incredibly important for all of what we do. And you can imagine for Ben and Bao, when you're assessing businesses, all sorts of businesses. So I don't really see a straight line there, but maybe one of the other panelists will see something there. In terms of the value of the CFA, listen, the CFA is fine as a differentiator in a competitive world. That I think, any little extra bit helps. But there's some things, even though the CFA is something to put on your resume, and again, people realize all the work and knowledge that goes into that. I think in terms of a business school degree is obviously much broader learning, but the trade-offs there are so obvious in terms of time and expense and so forth. So maybe one of the other panelists has something particularly insightful on these topics.
Ben, Bao, any comments before we close off?
Yeah, contextually, we still look at the great selective universities of the world as sorting functions. It helps us understand how somebody got to a certain place in life, and it's kind of shorthand for a whole bunch of life experiences. So if you feel the need to change careers and you want to be sorted into a different category, go get a degree from a highly selective university, and the world will look at you differently. Will you acquire unbelievably useful differentiated skills? Maybe. Depends what your career path has been. But I think it's very individual specific. We've certainly promoted people direct through, don't have MBAs. So it's very situation specific. But that's a great question to ask. And if you're considering business school right now, form your own little panel of experts and ask them. Say, hey, based on where I am today, if I had an MBA on my resume, would you look at me differently 2 years from now? And see what they say.
And Bao, any last comments from you on this topic?
I would echo what Ben and Josh have said about it. I think I learn a lot. I think you meet a lot of interesting people. If this panel is representative of that, Ben and Josh and I went to business school together, right? So, you create lasting friendships, and we went to business school a long time ago together. But you create lasting friendships, and it's a great way to learn and meet really interesting people.
Excellent. Thanks, Bao. So we are at the top of the hour. Again, a big thank you to the audience, and a very big thank you also to the panel for sharing your stories and your insight. The replay will be available 24 hours after the close of this webinar. Again, feel free to share your feedback via our survey, register for the Dealmakers Circle if that's something that is of interest to you. And then finally, if Datasite could help any way throughout the deal lifecycle, please feel free to contact us to learn more. Excellent. Thanks again, and hope everyone enjoys the rest of their afternoon.
Thank you.
Thank you.